because this is still an environment there's a lot of really good deals out there, and there's not a lot of buyers that are fighting over them, which is a lot funner environment than what it was 5 years ago when there was a lot of buyers fighting over the exact same deals. And and even though rates were lower, I much prefer this environment right now on the buy side. And it sounds like we're going to have an extended period of it, probably for the rest of the year. And like you said, we don't have a crystal ball, but we're probably going to have an extended period of being able to actually negotiate on deals, actually look at deals without having everybody flooding into the markets. And I think that that's a good thing for us as investors, because it widens that buying opportunity that we have, which I believe is better right now with a little bit higher rate environment than it is when those rates drop and I think the floodgates open.
I think this rest of the year is going to be a great buying opportunity for those that recognize it. So we're in a much more healthy environment than we were, the past 2 or 3, 4 or 5 years.
I like I said, as a buyer, I much prefer this environment. And I think that, I mean, the rates are still low enough where you can still pencil out a lot of deals, right? It's not, we've always been navigating really since we recovered from the Great Recession. So really since about 2012 to 14, when we started recovering, we've been dealing with high prices going up. Prices were skyrocketing really through that whole time. Rates were right now rates are higher. Rates were really good during that time, but also very low inventory. And so with high prices and low inventory, and then a lot of competition with the rates in that low rate environment, lots of competition. You're literally just like, you're paying over what assets are worth. You're trying to just get a deal done. And it was like, because there was low rates, we kind of justified it. And then we saw rates spike mid 2022 and everybody started sitting on the sidelines. Now everybody's like, the other two prices stayed high, inventory stayed pretty low. Even though we're getting more inventory on the market, historically, it's still very much a low inventory environment. We're still way short on the number of houses that we'd like to see in a market to really start to bring prices down a little bit. We're not even close to that, it seems like, in most markets. But now that we have those high rates, a lot of people are sitting there, which gives a really good opportunity for those of us that really are understanding the game, because now I don't have to worry about somebody completely overpaying or making or walking into a deal blind. I feel like sometimes, because you were giving up, your contingency periods, your due diligence periods, your appraisal contingencies, all these things, which we still need to get all that stuff done. But we were like, hey, listen, I'm gonna put all this money at risk just to try to get the deal. And we don't have to do that now. And that is because of a little bit higher rates in the market right now.